Welcome at Encavis. My name is Joerg Peters. I'm heading the corporate communications and investor relations of the group. May I have a short interruption for the disclaimer. This is not an offer to buy or to sell Encavis shares at any time. We are a solar company. Exactly, we are the pan-European independent power producer of renewable energies, wind and solar. As you may see, our largest and also one of the largest solar parks throughout Europe, Talayuela, the largest PV solar power plant we have in Spain. With a sustainable and completely subsidy-free generation capacity of 300 megawatt peak in the size of around 1,000 soccer fields, built of 1 million solar panels. We love solar power plants for several reasons, especially for the improving efficiency and cost reduction through economies of scale and scope. And this is one of our unique selling propositions. Our name is program, Encavis, energy, renewable energy. Capital, subsidy-free secured revenue above market IRR, and the vision of a sustainable decentralized power generation in Europe for Europe. Sustainable growth of 26% compounded annual growth rate over the past 7 years with almost constant margins, of example given 75% EBITDA margin, which will continue in the midterm, also as you will see within our growth strategy Fast Forward 2025. This will be secured by our next USP to reduce, if not to avoid, the developing risk in 10 different European jurisdictions, from the north of Finland to the south of Italy or the south of Spain, with all their very specific regional and local differences. Encavis focuses on locally based and well-connected strategic development partners, exclusively secured project pipeline of 3.5 gigawatt with pre-agreed internal rate of return per project dominates the symbiotic partnership of development partners and Encavis. Encavis strengthens to finance these projects. Encavis control the construction, and we originate the PPAs, the power purchase agreements, with industrial corporates, international utilities, and globally active tech companies. Every single renewable energy park is financed accordingly to its own price fixing period. No back-end loaded financing, 100% of equity of every single park post-financing of 10 to 13 years currently. Marginal and average cost of renewable energy production will be close to zero post-financing period in the so-called golden end, for a minimum of 5 to 10 years in wind farms, for a minimum of additional 20 to 30 years for solar parks. Encavis growth strategy Fast Forward 2025. Our capacity will increase from currently 1.8 gigawatts up to 3.4 gigawatt at the end of 2025. Based on a project pipeline of more than 3.5 gigawatts, which is secured with our strategic development partners. With a constant EBITDA margin of 75%, our earnings per share will increase up to 70 euro cents per share in 2025. All this based on a solid equity ratio of 24 to 25%, financed from the operating cash flow of our existing portfolio of wind and solar parks. This growth strategy, Fast Forward 2025, I just presented, is our base case scenario, as you could see in the lower left corner. But there are additional opportunities available, M&A of companies or portfolios on the one hand, profitable business models and storage technology could be another addition, or the investment into other growth markets outside Western Europe, especially maybe in Eastern Europe, if the Green Deal of the European Union will give some investment guarantees for these countries. State-of-the-art IT infrastructure and remote-controlled operations secure 95% fixed revenue via feed-in tariff and power purchase agreements with no energy price risk for the next 10 to 13 years. 10 years for the power purchase agreements, 13 years for the resting period of our feed-in tariffs. All this result in a very low-risk business model of Encavis. No interest rate risk at all due to the feed-in tariff and PPA agreements over the next 10 to 13 years. Investment grade rate, BBB- from the scope ratings affirmed latest in October this year. So the firepower of 200 to 400 million euro, which is available for further investments, will be a very solid base for further growth. No impact of COVID-19 on our operational business showed sustainable business model in itself. Constant operating margins from the past as well for the future, reliable long-term dividend policy, including scrip dividend for our shareholders to choose, and the minimal developing risk versus sunk costs of incorporated development departments, most of our competitors. May the sun be with you. The future of energy is now. Together, we strive to improve each and every single day. Thank you very much for your attention and for your interest in Encavis. And please feel free to contact us at any time if you have some more questions.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.